Good day traders, welcome to this week's technical market overview. We saw a lot of breakouts last week and we'll be looking where the markets are heading higher or looking for a little breather. This is also the last week before the start of our trading competition, so if you haven't yet entered the competition, please visit the link in the description below. Let's get the disclaimer rolling and I will see you back into the charts. We are starting by looking at the US dollar to South African rand. Last week we mentioned that price could follow the same consolidation pattern that we saw in December leading into January, and so far that scenario is the one that seems to be playing out. In this scenario, should we see a break above our 4-hour 100 SMA and also above the highs there at about 1483, that could then see price retest the crucial level at about 1498 to 15, and a break above that could see a bullish reversal, sending price to retest the level at our monthly R1 at 1568. Should we break below our current consolidation level at about 1453, which is our monthly S1 pivot, that could see price then head lower to retest the area between the 14 level to our monthly S2 at 1394, which is also the lows from our January or December 2019 leading into January 2020 level. Moving on now to the EURUSD. Last week saw price whipsawing between our weekly S1 pivot and that 4-hour 200 SMA, making yet another lower high. As price is getting rejected from this level, it means our larger head and shoulders pattern could still be in play, with any break below this neckline area at 1.205, possibly sending price on its way to the full head and shoulders target sitting at 1.178 at the bottom. For that, of course, to happen, we do need a close below that neckline level, and as we can see, we do have some slight support just below it at 1.203, which is also the previous swing low from last week. So just keep an eye on that level for price action. And in the scenario of a bullish reversal, of course, we would need price to take out the highs from last week, and that would currently be sitting at about 1.214, but to be safe, any break above 1.215 could then send price higher towards the top of that previous right shoulder at 1.219, towards the weekly R2 at 1.225. We will now have a very brief look at the economic calendar for this week. We can see that we have one high impact news event expected tomorrow at about 5 p.m. and that would be the Federal Chair Powell testifying, and then on Wednesday there's some events affecting the New Zealand dollar, as well as the US dollar, again with the Federal Chair speaking around about 5, and then for the rest of the week we are only expecting medium impact events. We are moving on now to the GBPUSD, and we were definitely correct when we mentioned last week that the trend remained very bullish, with our bullish target at about 1.391 quickly being reached, and for now it would seem that price are a little bit stretched, with at least a minor correction expected to either the weekly pivot, which would be at about 1.395, or perhaps using the 4-hour 50 SMA as a dynamic level of support. The next levels of resistance would be somewhere between our weekly R1 at 1.407 to our weekly R2 at 1.416, again using this upper diagonal as a guideline for that upper resistance. Should price break below our 4-hour 50 SMA, just looking at some level support, we have our monthly R1 at 1.381, so that could be a level of support. However, also worth considering, as I've mentioned, we have our weekly S1 very closely to coinciding with our 4-hour 50 SMA. So any break below that area could even send price as low as our weekly S2 pivot at 1.375, coinciding with that 4-hour 200 SMA, which has held up so far. Having a look now at the Australian dollar to USD. Once again, our bullish trend continuation call turned out to be very true, with our initial target at 0.780 quickly being reached. There's still a lot of scope for our bullish scenario, with targets somewhere between our 0.79 monthly R2 and weekly R2 at 0.797. Definitely not out of consideration, although it should be worth noting that any pullback will not be unexpected, with our initial levels of support at our weekly pivot at 0.782, with our weekly S1 pivot also coinciding with that 50 SMA, all at 0.776. I've highlighted the area here in between our 4-hour 200-100 SMAs, as this would also be a very strong level of support should price pull back into this area. We are again moving on now to the Nasdaq 100. Last week saw price come just 20 points shy of our initial bullish target that we set at 13,950, with sellers stepping in and sending price towards support from the 4-hour 100 SMA. The bullish trend is therefore definitely still intact, and unless these levels fail, a deeper correction towards the 4-hour 200 SMA at our weekly S1 here, 13,400. That is the scenario where that would be likely. Of course, should price continue upwards and break back above our weekly pivot and at 50 SMA, possible next bullish targets would include that area between 13,950, which is last week's high, and our area of our monthly R2 coinciding with that upper diagonal at 14,100. Moving on now to the DAX. Last week saw mostly muted price action with another retest of our 4-hour 100 SMA. Resistance remains at the highs near 14,150, with a break above this level probably seeing a target area between 14,355 and our monthly R2 pivot at 14,444. And should price break lower and take out the lows from last week, breaking below the weekly S1 at 13,860, that could see price correct deeper towards our 4-hour 200 SMA, which coincides with the monthly pivot at 13,625, with some additional support from that area at 13,350, offering very strong support. We are moving on now to gold, and we're looking at it from the daily time frame. As mentioned last week, the bearish trend has remained intact, and we ended up seeing our target being reached at 1,780. That was the monthly S1. Price has then also come just within 10 points of our 1,750 short target, which is also the current level of support, and with the 1,810 level now turning into resistance. Of course, we also have that diagonal still acting as dynamic resistance, meaning the area between 1,810 and about, let's say, 1,840 would all be considered resistance, with a break above our 1,850 level only then be considered a bullish swing, giving us higher targets initially, probably at the area of our monthly R1 at 1,957. We are concluding this week's technical market overview by looking at Bitcoin. Bitcoin easily met our monthly R3 bullish target at 55,100 and could now be heading even higher towards the area between the monthly R4 pivot at 61,700 and the yearly R3 pivot at 63,000. Initial support will now, of course, be at our 55,000 level, with the consolidation zone between our yearly R2 pivot at 46,000 and that monthly R2 at 48,600 also being an area of support. And then, of course, we do have our deeper level of support that will be coinciding with that daily 50 SMA near the monthly R1 at 41,000. And of course, these are all extreme levels and it would be advised to remain cautious. That concludes our technical market overview for the week. Please remember to like and subscribe. Also, just a heads up that starting from next week, we will be premiering our market overview every Monday at 12 noon instead of 7. This is John Jacobs for RMD Trader. Remember to trade smart and trade successful.